The startling footage we're about to show you was photographed by a 42-year-old, Romero Valadares. This video was taken yesterday afternoon at his son's 7th birthday in the city of Passo Fundo, Brazil. It was sent to the local news bureau there and sent to us via satellite just a few minutes ago. All initial opinions are this is genuine. What you're about to see may disturb you.
Move, children! Vámonos!
Tá atrás da garagem! Tá atrás daí! It's behind!
Oh!
Tá atrás da garagem! Tá atrás daí! It's behind!
Not only are we ruled by completely incompetent people, but they're also lizard people. Guys, this is Brendan from Market Makers, Max Payne. We are going to decipher the market today. We're going to decode the market. We did a live stream over the weekend, me and one of my senior traders, and he noticed a pattern of descent that repeated in all of the bubbles. I got to share this with you. It was a hot find. If you guys want to join our Discord, the link right underneath this video, the join button is integrated into YouTube, pops you into our Discord. You get live streams, TA, and trades. Definitely suggest you check it out to profit in this marketplace. So as pattern traders, guys, we look for patterns. I look for cycles. I look for retracement levels, both micro and macro. I want to share this with you with what Mark found. So if we look at 1973, we're going to look at the big bubbles here to speed this up. We're going to look at the 50% plus declines. That's 73, that's .com, that's the great financial crisis, and that will be the bubble that we are in now. Let's take a simple fib retracement. Go to the swing low, go up to the swing high. I only added one fib level because you're going to see it repeat over and over. The one spot, 128, look where you hit. Now the symmetry. What is the symmetry here? What is the anatomy, the aesthetics of a bubble here in the way that we decline? I want to share this with you, okay? You have your 233 that's colored. The white is the 200. Notice a couple of things you're going to see similar in every single great decline that we are in. This is the 7-year apocalypse in the 7th year, exiting the Shemitah year, which is the 7th year. If you guys don't know what I'm talking about, watch the 7-year apocalypse video on YouTube. We also have the full Shemitah video uploaded on Rumble. You can watch that in its entirety on our Rumble, okay? Give us a follow there. Hundreds of you are there now. We will be uploading exclusive content. That link also in the video description. The one spot 128, but here's the anatomy, guys. Where are we now? So September of 1972 was the beginning of the Shemitah. It ends in September of 1973. Let's go ahead to September of 1973. Now, notice all of these marketplaces, guys, the marketplace top, this is the S&P, it's symbolic of the broader market. Now, the marketplace topped January 8th, 73. Right? Does that sound familiar for the S&P? In this cycle, the Shemitah began in September 2021. The S&P topped January 4th of 2022. So this is your top in the Shemitah year, and here you are exiting the Shemitah year, and what happens? This is where we are right now in this cycle. We are above the 200 and 233, and this is what we're looking for, that drop. We could either reflect off of it, or we can fall right underneath it and start back testing it. And then when your back test fails, then you are going down more, guys. Important to note, The Shemitah year was 1972 September to September 1973. You bottomed the following year in September 1974. Again, that one single fib to pay attention to is the 1.128, 50% decline in the S&P. And why is this important? Because we're going to talk about where Bitcoin could get to in a max pain trade after I show you this. Let's go ahead and fast forward to the great financial crisis, or to .com first, actually. Got to go to .com. All right, speed this thing up, get up to the .com. This is a lot of chart here. All right, here we go, .com. This is a pure equities bubble. Let's go ahead and look at this. So .com, guys, the Shemitah began in 2000 of September. It ended in September 2001. Let's take a simple fib retracement where we can get the swing low here up to the swing high. Look at the 1.128, guys. So what we know here, let's find September of 2001. September of 2001, July, August, September. Right here in this quadrant, you had already lost the 200. You see this? You were over here in this quadrant of September 2001. And what happened? Again, accelerated decline, came back up to back test your 233, failed, and then the ultimate drop. Notice once again, the market bottom was the following year after the Shemitah. Shemitah ended in 73, market bottomed in 74. Shemitah ended in 01, market bottomed October of 02. This is also a pattern, guys. These quadrants that we're approaching in the current cycle with the 200 and 233 is very important to watch, because the smart money, there's no such thing as smart money, my friends. It's all dumb money. They just have big money. If they were smart money, they wouldn't have lost everything, meaning the hedge funds, the investment banks, and the 08 great financial crisis. That's not smart money. But yet when you turn the news on, they're all talking about how you gotta buy quality right now. They're going to be wrong again. And let's look at the great financial crisis. Another 3 sigma bubble. Guys, I'm going to be uploading the Jeremy Grantham interview in full with my comments. I'm going to edit those comments in there so I can explain these concepts to you. That will also be on our Rumble. I'll let you know as soon as that is up there. But again, follow us there for that exclusive content. So we go from our swing low of the 02 bottom up to the great financial crisis high. Now remember, the Shemitah began in September of 07. September of 07, the market topped out in October of 07. Okay, you made your top once again during the Shemitah year. And where were you in September of 08? Go ahead and draw this for you. September of 08. Once again, you fell below the 200, 233, and look what happened exiting the Shemitah year in September of 08. Massive, massive decline. Again, guys, where we are now is approaching Elul 29, the culmination of the Shemitah year. That's September 25th, and we are just above the 200, 233. Easily fall below it, come back up and back test it, or we could reflexively bounce off of it. We're going to look at that in the current cycle. Again, the key takeaway here, guys, look where the price fell. 1.128. 1.128 in 1973, 50% decline. 1.128 in .com, 50% decline. 1.128 great financial crisis, 57% decline. Let's go ahead and go to the current time. Let's bring this to 2022. Let's see what we're dealing with here, guys. Will this pattern repeat? Spoiler alert, you know it already will. Let's look and see where we're at. Take the simple fib retracement, real easy to find our swing low, pandemic low, up to the market high. 1.128 is 1855. I want to show you the sheer amount of pain this will cause the market. We're going to talk about this, and then we're going to look deeply at Bitcoin, okay? Couple of things you need to notice here. We are above the 200 and 233. When did the Shemitah begin? It began in September of 2021, right over here, okay? This is the Shemitah beginning, and of course the market topped January 4th of 2022. It topped January 8th of 1973, and then you began your decline. Now, a couple of key things to look at. If you lose where you're at now from this rally base, you're coming back to your June lows. If you lose that in an accelerated decline, your next inflection point is your 200, 233 for the next lower high, right? If you don't get a strong enough move off of that, you're just going to lose that completely. And of course, we have the Gann market pattern to show you this as well. But what I want to show you guys is a couple of things here. And I drew this on the finished chart. Let's go ahead and look at the finished chart. The finished chart. So here's the 1841 on this chart. Look at where this lands you as far as Fibonacci. 61.84%, minus 61.84%. That means the 1.128 fib level. Do you understand this? The 1.128 fib level is a 61.84% decline. I can show you that just like this. Let's go ahead and grab that fib retracement here just to show you again so you can see what I'm talking about. That is a 1.128 on the fib. That is a minus 61.84% decline. That first level that I'm looking at, remember that's off the trend-based fib. That first level is a 1618 off the trend-based fib at 2409. Guys, this is an amazing drop. This will be the biggest drop since the Great Depression, since the 1929 crash where it went down 84%, the S&P. This is the next largest drop if this plays out. And we hit this exact retracement in every single Shmita year, capturing every single 50% or more bubble crash going back to 1973. This is the 7th Shmita cycle since that 1972-1973 cycle. 7 being a very important number in a lot of ancient texts, including the Bible, including the actual Shmita cycle itself. So this is where I anticipate us going for Max Payne, guys. Max Payne 1841. I went ahead and threw a double S curve on here so you can see this. Gann, the godfather of geometric trading, but this provided nice support level from the all-time high, tagged it to where I think we're going at the 2409. I believe this is going to give us symmetry here if this market top. This is also a support level here, which is why I said we could come down, bounce up, and then come down, okay? Not as important here, the timing of these waves. We don't have a time. I'm using the October 31st date based off of Bitcoin, based off the Russell. I don't have a pattern to show me the exact date of this decline, so we're using this for forecasting. But I believe all of these steps will be completed. And again, we have this terminating September, October of 2023, following the cycle of every single bubble crash, terminating, making a bottom the following year after the Shmita. The market moves in patterns. One more thing I want to show you. You don't have to have a 50+% decline to land on this exactly. If you ask a lot of people, what was this pandemic crash? What is the first thing they say, guys? They say it's a black swan event. Nobody could have known what target it was going to go to. It would have been impossible to predict. If I just showed you, if you just learned what I just showed you, you could take a fib retracement, go to that swing low, go up to that swing high. What level did you hit? The 1.128. 22.12. Look at that. Almost on the dollar. 21.91. Almost on the dollar. You hit the 1.128. The market moves in patterns. You can choose to believe it or not. So at this point, when I show you this, you need to ask yourself one question.
See, what you have to ask yourself is, what kind of person are you? Are you the kind that sees signs, sees miracles? Or do you believe that people just get lucky? Or look at the question this way. Is it possible that there are no coincidences?
There are no such things as coincidences when it comes to pattern trading and understanding market cycles. Guys, let's jump to Bitcoin. Bitcoin on the big chart here. Bitcoin on our weekly market pattern. The question you guys need to consider, the question I want to see you respond to in the video description below. If you share my view that the S&P at a minimum is going down 50%, and most likely, if it repeats the same cycle it has, 3 separate times now in the last 50 years in these great bubble crashes, you're going down to the 1.128, which is a 61.8% decline, the expression of 618 in Fibonacci. If you think that's going to happen, right now the S&P is down 19%. You're talking about tripling your declination in the S&P. Trillions upon trillions of dollars exiting the marketplace. Do you really think, looking at Bitcoin, you're only going to 10K? Do you really think when you're watching these other YouTubers talk about the bottom is in, I'm expecting a move up from here, the bottom is in? Knowing what I just showed you, knowing how market history repeats itself, where do you guys, give me your honest opinion, and no opinion's wrong. You can say we're going up, you can say 100K. I just want to know what you guys think. I'll answer all of your comments in the video description. I personally think at a minimum, you're going back to these pandemic lows once you see the marketplace come down on this leg. Coming down here, you're going to see your descent to that 10K region, in my opinion. As you decline here, and if you lose the 200, 233, you're definitely getting to that 10K region, okay? And this whole area here could be that 10K to 15K region. This leg down here is when you lose 10K. This leg, whether you go to the 1618 at 2409 or to the 1841 for a 61.84% retracement, Bitcoin's going to be at 3.8K or less, in my opinion. Let me know if you guys share that opinion or what your thoughts are. So looking at that on the weekly again, I'm looking for our support ring here. We can go ahead and throw a trend-based fib on here as well. Take a more current wave projection based on the weekly pattern here. Throw this up here. You can see our double S curve lines up beautifully with the 886 at 16,284. You're sitting on the 786 at 19,891 at the moment. So if you lose that, looking at on a weekly time frame anyways, that next key level of support there at the 16,284. Let's go ahead and go up to the daily. Daily, we have, or weekly still, we have Dante's Descent, guys. Again, the Bitcoin pattern that is tracking 100%. 11 bars down, 9 bar run-ups, 20 bars between swing highs. This lands you 10,591 on Bitcoin. October 31st weekly candle, 9 bar run-up. Should get you back up to, if this pattern completes in this fashion, 15.5. Again, coming down to 10, a 50% move from where you are now and a 50% move back up. Remember, this is not a price-sensitive pattern. These boxes are averages of the previous declines and previous rise ups. But it marries beautifully. These are massive trades, guys. You want to trade crypto? Check out BITGET. Link in the video description. Help support this channel. You want to make money on equities and trade with us? Check out SimpleFX. $5,000 bonus. Up to $5,000 bonus based on your deposit, available instantly. Tutorial guide also in the video description. All right, let's go out to the daily time frame, guys. Daily time frame, very range bound between the 3-2 and 0.5, 20,229 and 0.5 at 19,437. You see that? Just bouncing up and down here. Have the Ichi cloud above us. Let's look at a couple different indicators here. We've already been looking at the volatility. We'll go ahead and throw that back on. Let's get Ichi off here. And you can see this still is extremely, it's actually gotten tighter since the last video. You see that? You opened up a little bit and now it's back to max compression. Okay, this move is coming in, guys, because the end of September is approaching. Again, I do believe that bias will be to the downside. And you could have a wave up. And I hope there is a wave up to get an easy short entry to ride this down. Let's go ahead and turn that off. And let's look at our gummy worm. Looking at the trend here. So the gummy worm has you coming down potentially a little bit lower. You can come down here, but to the 618, 18,646. Bitcoin is holding up surprisingly well, but again, you got to take out that key support level on the S&P and the other indices, and then you'll see further decline. And let's go ahead and look at Bitcoin here on the money flow. Money flow, you do have a double top type structure. You're coming down to your median line. We'll see if you get an inflection off that or if you go bearish here, okay? It's something that's important to watch. And let's see, we could have some buying coming up. You know, by the way, guys, the CPI is Tuesday, or not CPI, the Fed meeting is Tuesday, Wednesday. Wednesday, we get the rate hike. If it's 75 basis points, I don't know what's going to happen with the market. Market has priced it in, but what does that mean? Doesn't mean the market's going to go up. Now, I can tell you pretty close with 100% certainty, if Powell jams in a 100 basis point hike, Boom, there is your catalyst, because the market has not priced that in. Has not priced that in at all. And conversely, if he went down to 50, since no one's even talking about 50, you could get a rally out of that. So nobody knows until the event actually happens. Looking at the 8-hour time frame, you're just waving, guys. Getting resistance on the fan, waving back down to your mid-range, and looking to maybe come back up or continue to come back down and retest that support. 4-hour time frame, a lot of the same. Bitcoin's just stuck in this tighter range here between these fibs at 382 and the 0.5 on the daily, 20,229, 19,437, going ping-ponging back and forth. Some short opportunities there for sure. Ethereum, same thing, guys. Let's go ahead and get a wave projection down on Ethereum. Look at your support levels if anybody's interested in trading this. You just lost the 618 at 1411, and if you keep coming down, you could come down to 1309 at the 786, or you could just be down thrusting here to pop back up and re-enter this trading range that you've been in. I think you're going to stay in defined ranges until the market decides what it's going to do, and I think Monday and possibly Tuesday may be pretty flat, very mild volatility, waiting to see what Powell does Wednesday when he gives the press conference, when he announces, or when that rate hike also comes out. So let's look at the DXY. It's been closed, so it's the same since last video. Again, massive uptrend, up 17% on the year. Real quick on the indices, just the key support levels to look at, since we already went over this on Friday as well, or Thursday. 618 at 38.84 on the S&P. If you lose that, look out for 37.16. You see that? You're right there at that key level. On the NASDAQ, let's look at the daily. Of course, we had our trade here. You're at the 1 fib as well, 11,817. You lose that, look out for the 1618, 10,640 as you decline. All of these indices are in the same shape, including the Russell. You're putting in a double bottom potential here, okay? You see that W pattern? You're putting in a double bottom, but that doesn't matter. You have to have velocity to get the price to move back up, okay? If you don't get the price to move back up, you end up just rolling over, making a double top type structure over and over again in these marketplaces. Let's look at the Russell really quickly, because we didn't cover that one. Again, on the daily, since the market is closed, opens up on Simple at 6 p.m. Eastern time tonight, guys. Again, double bottom structure is in place here. This is your rally low on all the indices. You went up, you failed. You came back down. You see the double bottom here? If you come back up again, you're making that double bottom structure, giving us another opportunity to short once again for the next leg down. But if you lose this double bottom and you just roll over, what happens, guys? You got to start looking at your June lows, because that's where price is going as we approach the end of September. Accelerated decline. Guys, hope you enjoyed this video. I hope this is a video you share with your friends and family that are interested in crypto. Really do appreciate your support. Like, subscribe, and click the alert bell. Thank you so much for helping this channel grow. Another video coming soon, guys. Good luck and good night, everyone.